Joining us now to discuss new tax legislation affecting homeowners associations is Piet, who's Project Director for Tax at the SA Institute of Chartered Accountants, also known as SAICA. Piet, the introduction there saying that homeowners associations will cease to be vendors for VAT purposes. That sounds quite a boring technical thing. Tell me why it's not.
Yeah, probably is. There were some submissions made in the past for homeowners associations to actually no longer be vendors, and the reason was, I think, if you look at the underlying principle in the VAT legislation, if you buy in a body corporate and own your property through a body corporate, you are a residential owner, you can't claim the VAT input back, so it's made exempt. Principally that provision of that residential accommodation service is exempt from value-added tax, and the body corporates was initially the only ones that handled communal expenses and dealt with those expenses, and then homeowners associations came into existence, particularly to deal with common expenses such as security costs of the body, all the properties in that area. And
so just to get a picture here, typically we're talking about retirement villages, clusters,
clusters,
where you
you
have to have an association in order to run the place.
Deal with the common expenses. It may also be, it's very common for blocks of property to set and fence them in and handle common security expenses. So this is what we're talking about. There are instances where beachfront properties were handled to do access control and stuff like that, and you set up a homeowners association to also deal with environmental impact there and stuff like that.
So let's say that you're the chairman or a member of a committee that's running a retirement village or a cluster settlement or a gathering of beach houses and so on. What should you be doing now?
Well, the first thing is that if it's only residential owners involved and there's no businesses, because that would make sense just to remain on, you would have to account for on the 1st of April today that you no longer make taxable supplies. So previously you were registered, you were charging VAT on your supplies. You now no longer have to charge that, and you have to account for VAT on the property that you've claimed the input tax in the past. So there's a big thing. SARS allows you to pay that off over a period of 6 months. The members of the body or the homeowners association would look to a saving in the cost now, because essentially what happened in the past with them having to register, and they're mainly service related industries where you don't charge VAT, and now suddenly you have to charge VAT on it because the homeowners association is registered for VAT. So they would expect to get a little drop in their monthly contributions. Now unfortunately most of these fees are fixed up front and for the year, so when you go into your next meeting, which normally happens now, have to make certain that those savings and costs are given through.
So they should be saying, "Oi, what about the savings? Are you passing these through to the
us,
members?"
Yes, exactly right.
Why have they done this?
But they found that, particularly after 2006, that homeowners associations previously didn't deal with your rates and taxes. That was done by the body corporates. And since then, homeowners associations also started dealing with that, and it's essentially is a private cost that shouldn't add another layer of VAT onto it. And this is why government gave in and amended the law to make this. And it certainly is a saving for the homeowners.
Is there any estimate about how much money this will involve when it's implemented?
Yeah, I don't think it's big money. But there's no. I think maybe Treasury did look at that when they did that, because the submissions were, people were starting to voice concerns about this like 4 or 5 years ago already, and so probably not big money involved, but the principle is sound. When you handle communal expenses for people that use it for residential purposes, you don't want to add VAT onto that. That's meant to be an exempt supply.
So this is an evolution. One thinks, what, 25, 30 years ago, there were relatively few of these homeowners associations. Most people lived in flats or standalone houses, not in these groups and fenced-off villages. So are there other tax developments for that part of the community? I mean, as things have developed there?
Yeah, there were a number of amendments made in the previous years, particularly with looking at how you fund and transfer the property. So in the Transfer Duty Act and in the Value Added Tax, your developers would be value added vendors, and they would have to register and charge for that. You buy the property and the loan account, so they see that as a package and stuff like that. But no real relief on the tax side for those body corporates.
And then, Piet, who is responsible for this? I mean, is it the chairman of the association? Is there a legally responsible person?
Yeah, look, those associations are normally set up by constitutions. You would have a board of trustees or somebody that deal with it, or normally it's non-for-profit company, so they would have a board of directors that are responsible for it. And I would think that the members would ask the questions, but ultimately your trustees or board of directors would be responsible for dealing with the VAT issues here.